Alright, YouTubers, I am back again with another video, and in this video I'm going to delve into something that I haven't even discussed with you guys at all. But I have been looking at charts and studying the technical analysis surrounding this asset, and what I'm talking about is the Bitcoin, guys. I'm talking about that cryptocurrency, and here I'm looking at the Bitcoin US dollar, and I'm going to discuss this pair, and I'm going to delve into this because this seems to be the latest trend, which comes with a lot of risk, but also comes with a lot of possibilities for profit. Okay, so we're going to look at opportunities to buy this asset, and I believe you would. There's some places where you could sell this asset, but we're going to talk about buying opportunities and where to look for those because this thing has been on a nice move for quite a while. We're going to go backwards into the charts because I want to show you that what I'm going to use in the technical analysis that I use works, because if you look at the current currencies, you'll see the same kinds of things that we look for trading the regular currencies as you would with the cryptocurrency. Okay, so going backwards will help us to understand and kind of know the asset a little bit, because the first thing about this thing, there's a lot of risk and there's a lot of reward, but there's not a lot of understanding as to levels and whatnot with this asset, because it hasn't been around that long, so you don't know which levels are going to hold as far as support and resistance. So you have to build a track record. You have to be able to see that track record. And with the regular currencies, we see a good track record, but with this new cryptocurrency, pretty much the track record isn't that great. So you may find a high where we are now is an all-time high, and it keeps making new all-time highs as it goes higher. So where's the previous high? You were way past it, so you don't have anything to really compare it to, right? So that's one thing. So I'm going to go backwards so you guys could see, and actually I could go backwards and then come forward. That's what I'm going to do. I'm going to go backwards and then I'm going to move forward. So the opportunities that exist with this using Ichimoku, I had to make the chart like this so you could see, because some of the candles are pretty small. So you could see when we're on an uptrend, right? This thing, just like any other asset, likes to follow something, or this follows the asset. All right, so in this case, Tinkinson is following the asset, and you can see when the asset is in a good move to the upside. So when this currency is in a good move to the upside, you could see that it stays above your Tinkinson level, and then you get a good pullback here. And where does it look to recover from? It looks to recover on your Kijinsen here. All right, and then it doesn't close below that level. So Tinkinson's pretty much like your trend line, but you want to catch bounces off of your Tinkinson in a strong trend. And then the same things that you see for price action are the same kinds of things that you see for regular currencies, because a chart is a chart, and it's going to, you know, chart itself based off of, you're going to see that price action based off of what people are doing, basically. So we look for inside trading, right? This is inside trading here. You had one big mother candle, and then 1, 2, 3, 4, 5 candles inside of that one candle before it broke out. You also see the price bouncing off of Tinkinson. So there's ways that you can catch this. So when we discuss in my membership, when we learn about trading signals and triggers, one of our trading signals and triggers is inside trading, basically. And so we'll be trading inside of one candle, or we'll box the market in at certain levels. So if we box a level in, we want to see if the market's going to get above that level. If it closes above that level, that's where we decide to take the trade, because inside of our box the market is doing nothing. So therefore we don't want to trade that, because it doesn't have the strength yet. Now you can see with this pair how it's following Kijinsen and Tinkinsen, and how Ichimoku works here. And just like when it's in a flat ranging market, you could see what Chico span is doing, how your Kijinsen is flat. You got crossovers. So therefore you could tell that, you know, it's a sideways market. Or looking at some of your other indications, you could tell when you have a trend to the downside, or reverts back to the upside. So for a lot of the traders that trade with me, I'm going to mark this level here, and they're going to know pretty much what we're looking at here. So that level there, you could look at that. I'm going to move this. I'm going to format that. I don't want that all-time high in there because that's not an all-time high. So even looking at that level, we could see where we have bounces on our level. All right, and then we could also see where the market stayed inside. We can see our rejection candles, the same things that we would look for in our regular trading. Okay, so you could see the rejection candles, the indecision candles, our rejection at Tinkinson, and the market staying above Tinkinson. You can catch these bounces off of Tinkinson. All right, and then again, I'm going to put my level again. Watch me put my level. And then you could look for the market to come back to your levels. All right, then you can see we're sideways here, and I'm going through this whole time. This is the daily time frame. Then I'm going to move. You can see where we were flat here, and you could tell that the market was flat. Look at your Kijinsen, it's flat. You're not doing anything. Look at the bottom of this cloud. The market's doing nothing. But then the market, you get a Kumo breakout here. Look at the angulation of your Tenkan-sen and your Kijinsen. That angulation is nice. So your Kijinsen pointing up to the upside, and that signifies a move to the upside. Then we have some other signals that violated this level that we teach that also would have been able to get into a good trade, and you would have had profit at least up to this point. All right, looking at the signals that we learn and teach. And then pretty much the market went a little bit flat and then took off again. And then we had our first break. When that first break, the market gave you some profit, but then went back to the upside again. So you had a correction here. And then you could see what's the same things we look for again. This is a bullish engulfing, right at Kijinsen, closed above Kijinsen. Now this would have faked you out for a minute, but you wouldn't have been looking for it. You wouldn't have been in a trade yet, and because you would have been looking at this moving to the downside a little bit, and then you had indecision at Kijinsen, but then the market broke to the upside. There's many opportunities for you to catch trades here. All right, and then you could see when the market's really strong how it stays above your Tinkinson level here. All right, and then you could catch bounces off of Tinkinson. And if you just know what kind of signals you want to look for and what kind of triggers you want to look for to get into the market. So basically, I still do the exact same things I would with any other market. I'm going to have a level, a signal, and a trigger to get into this trade, to this pair to trade it. Now, I'm not going to just jump in this pair because let's set this up. Because what I'm looking at now is the market was moving strong to the upside. I'm going to throw another indicator in here in a minute also. And the thing that we're looking at here is we're staying above this Tinkinson level and the Kijinsen level, but we're showing some rejection. So therefore, I already told you guys a lot of times when you see these long wick candles, especially on the daily time frame, you want to look for a close above this level or a break above that level. You don't When you have a nice rejection like that, you don't really wait for the close here because the close could take you way above this point. All right, so you're going to limit your risk by taking the level because the rejection signifies that there's a lot of buyers coming into the market, which push this market back up. Right, so it looks like a lot of people purchasing this asset, and then maybe this market moves past this point. All right, but you can see we still follow Ichimoku pretty well. So all your Ichimoku signals are bullish, and it tells you pretty much what you could do. There's levels that we still look for. So if I don't want to purchase this thing yet because it's in the middle of a little correction or a consolidation, whatever you want to say. We don't know how much it's going to go, so we want to wait and see. All right, so if we zone walk this, we it, we would be able to get into an opportunity without taking a trade that's going to have us in a losing trade at that point. You know, saying that a trade that's going to give us big drawdown. We really won't have drawdown because we'll be doing a zone walk, and with a zone walk, we want the market to come back up to us. All right, but in this case, I do like this level, but I'd wait to see what the market's going to do because I think it could still correct itself. And there's levels where you would think it could correct itself down to. It could correct down to right back down to this Kijinsen level. But if it's going to stay in a strong move to the upside, it doesn't want to go below Tinkinson. All right. Then we can flatten out at some other levels. Pretty much look to flatten out at some certain levels. See if the market comes back to some of these certain levels that we look at. And if the market comes back to those levels, that's where we start to look for our opportunity to get back into the market. Because you don't want to get into this thing when it's correcting itself. You want to try to catch it at the best point available, all right? So there's not a lot to tell us where support and resistance levels are, but with Ichimoku there is. So if you just take the regular chart and take everything off of it, you don't really have levels. I mean, I can trade some of these levels because there's other things that I trade besides Ichimoku that we teach in our courses that'll help you to look at this without Ichimoku. But then when you add Ichimoku to it, it even gives it more probability for you to get an opportunity to get into a decent trade. All right. So currently, I think with this thing, I want to give it a chance to correct itself. I want to see if it's gonna, because we're in this zone here. So basically what I look at is you're in a zone here and you want to trade when the market gets outside of this zone. All right. So as long as the market stays in that zone there, then I don't really want to mess with it because we don't know what it's going to do. It could drop lower. If it goes below this zone, then we're going to take everything off the table and we're going to wait and see where it's going to go, because we're going to have certain levels that we're going to look for it to go to, and we want to see price action at those levels. So therefore we're at our first level, which is Tinkinson. Kijinsen is your next level, and then finally you're going to look at this level here, and then if the market drops all the way down to the cloud here, then you know you're going to look at that as support. So really with Ichimoku you have 4 levels of support and resistance: Tinkinson, Kijinsen, top of the cloud, bottom of the cloud, and then you have no more resistance. All right. And then I throw my fractals in there also. So the fractals tell me the direction of the market, and they keep me safe, keep me in the direction that the market is moving. So if the market's moving to the upside, I want to see my bull fractals, and if the market's moving to the downside, I pay more attention to my bear fractals and levels where I could get into the trade and maybe get out of the trade or take profit or even use for stop losses. All right. But this thing right now, I don't want to purchase this and be into a drawdown. I want to find out where this correction is going to end, and then I may look to get into the asset and buy it. All right. But currently right now we don't know what's going to go on with it, so we'll just be patient and wait. Now looking at the chart, you don't, like I said, you don't have anything to give you any help from this point, because you can't look left. You can't look left and see anything because there's nothing left. All right. All right. So if you look left, you don't see any levels to say, well, this is a double top or a triple top or a strong support and resistance level. These are new levels. All right. So therefore it's even riskier. All right. But knowing your technical analysis will help you with something like this. Okay. So I'm going to go to the weekly time frame really quickly. Now you could see the weekly time frame. The thing about this, man, Ichimoku is pointing straight up in the air. All right. So that means there's a lot of momentum on this. Now if I look at the immediate candle, sorry about that, the immediate candle is showing me a rejection at this time. So looks like it's a rejection. Now when we look at Ichimoku, it still looks strong, like I said, but pay attention to what Tinkinson and Kijinsen do, because really Tinkinson is going to be your immediate short-term momentum, and then Kijinsen will be your mid-term, and then the cloud is your long-term. So if you see this Kijinsen flatten out, then you know that the market's dying, you're losing momentum. All right. So looking back, even on the weekly chart here, it looks very, very good for some of the ways that we like to trade. So I'm seeing some of the same exact things that I would always look for. So I'm gonna go back again. Even on the weekly chart, doesn't matter. So we see where this thing began, then it's kind of unstable here, and then finally the market start moving higher. Okay, I'm gonna put these levels in here and watch this. Then you could see where it was flat here again. Okay, and then you could see where we were flat again, but look where we were honoring. We were honoring the Kijinsen level here. All right. Then if you look at this level, the market honored its Kijinsen level again. Showed you price action right here and good entry. Then you're honoring Kijinsen level again. Indecision here, then a bull candle. Little rejection here, big rejection, probably took some traders out of the market that were probably afraid at that point. This is the weekly candle, so it would have probably scared a lot of people out of that. But you could see big rejection, same things that we always like to look for. Market stays above Kijinsen or above Tenkan-sen for a couple weeks. Then we flatten out. Look where we honor the Kijinsen level. Honor that level. Bearish, bullish engulfing. Sorry, bullish engulfing. Market moves higher off of the level. Honoring the Tenkan-sen level again. Look at the market staying above Tenkan-sen. Maybe you could call that a bounce off of Kijinsen, but we never really closed below your Tenkan-sen level. So if we didn't close below Tenkan-sen, then I'm still looking at that as a bounce. All right. So these levels, good looking levels to me that you could trade. So members, you see what I just did, right? And you see what the market is doing. So the same things we always look for, we can look for with this cryptocurrency. And this thing has a possibility to give you 30% gains or more in a few days. All right, so that's outrageous. And the volatility is big here. So there's opportunities to get into the market here, but you just want to understand and know how, and understand your risk, and understand, technical analysis will help you to limit some of that risk that you're going to face. And if you have proper technical analysis, then you can profit on this thing. All right. But if you don't really understand what's going on and you just try to jump into this thing because everybody's jumping in and you want to jump in because, well, everybody's jumping in, I want to get in, you may lose your money. All right. So you want to have some kind of analysis to help you to understand what it may do. And even though it doesn't have a track record, but you could go back and look at some of the things that we just looked at, and you could see that it does some of the same exact things you're seeing with any other currency or any other asset for that matter that's traded. So this level may become very relevant here. All right, and if it does, I'm going to watch to see if we flatten out here. Now I'll go back to the daily. I like to trade on that. I don't really look at the weekly much. I looked at that weekly because I wanted to see what the if there was any levels that we could pay attention to, and also to show you that it doesn't matter what time frame I'm looking at. I like to look at the daily and 4-hour time frame. You're going to see the same things on all the time frames. Okay, so understand your level, your signal, and your trigger, and you'll be able to get this asset and profit off of it. If you don't understand that, you'll just jump in here, and you may be jumping in when there's a big correction. So I'm not even going to say this has corrected itself yet, and it's not really a correction. It's maybe consolidation. We're inside of this one candle, maybe forming a flag pattern here, but we'll see. Give it a chance to come down to some of these levels, see if it continues to reject Tenkan-sen, and if it does, then you got an opportunity. If it doesn't continue to reject, look for it to reject on your Kijinsen level. All right, and watch for that flat Kijinsen. Okay, so there's some good opportunities with this thing, and I'm going to be delving into it and showing you some of the opportunities that I'm going to get into. So I am going to trade this, but I'm waiting again, as I said, for it to get to one of my levels, and currently it's not at my level. I mean basically it is, but it's not showing me. I don't have my signal or trigger at this stage. So until I get that, I wait for either that level or the next level. One of those levels I want to see a signal and a trigger. So I go LST, level, signal, trigger, gets me into the trade, and we'll see what happens. But guys, hopefully this helped you out a little bit, but we're going to get deeper into it. I'm going to put out a lot of videos on this because it's such a new opportunity and there's so much more to talk about. I just wanted to jump into it really quickly and let you guys know that, yep, we're going to be talking about the cryptocurrencies. So if you have anything that you want to let me know or you want to talk about, just give me a shout. You could always come to my website, FX at One Glance. I help you learn how to trade this thing if you really want to. And if not, you can still use the videos that I've been putting out. It's going to be pretty much the same things that I teach you on YouTube. Will probably help you to get good trades again with this asset. All right, guys. So hopefully that helped you out a little bit. Brand new thing here, guys, and we're delving into the new year, looking at the cryptocurrencies. All right. Have a great one. Till next time. God bless.